Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets. The week ending Friday, November 14th, 2025. Kicking things off, I'm Max Profit. Key indexes were mixed this week. The S&P 500 index closed at 6,734.11, up 5.31, maintaining a very strong positive trend. The Dow 30 index surged to a new all-time high, closing at 47,147.48, up 160.38. In contrast, the Nasdaq Composite Index decreased by 103.95, closing at 22,900.59, marking its second consecutive weekly decline. The S&P 400 Midcap Index and Russell 2000 Index both experienced downward trends with strong volatility. Looking at market breadth, advances were less prevalent in most categories. The Dow 30 Index recorded 20 advances against 10 declines. However, the S&P 500 saw 211 advances compared to 284 declines this week. A notable decline in breadth was observed in the Nasdaq Composite Index, with 1,039 advances against 2,094 declines. Looking at returns, the Dow 30 Index had a commendable one-week total return of 0.34%. However, the Nasdaq Composite Index posted a negative one-week total return of minus 0.45%. The Russell 2000 continued its decline with a one-week total return of minus 1.83%, reflecting its recent downward volatility. Focusing on longer-term returns, the Nasdaq Composite Index has demonstrated resilience with a 10-year total return of 364.71%, translating to a significant annual rate of return at 16.6%. Meanwhile, the Dow 30 Index reached a new all-time high with solid long-term returns, emphasizing its sound upward momentum.
Checking out best and worst performing equities, I'm Penny Stock. Galecto posted a remarkable gain this week, closing at 26.83, up 21.88. This represents a substantial 442% increase, marking a new one-year high and showcasing a very strong positive trend. This rise is backed by upward volatility. Continuing with top stocks this week, Galecto achieved a notable 442% weekly return, backed by a daily momentum of 59.92%. Despite fewer overall gains for the month and year so far, Galecto's strong upward trend hints at promising future prospects. Looking at yearly performances, Galecto stands out with a significant annual return of 287.72% over 1 year. While recent years showed some downturns, the recent upward surge has reignited optimism among investors. Big caps are also seeing gains, with Albemarle leading by closing at 115.14, jumping 17.96 in price, or 18.4%. This move marks a new one-year high for Albemarle, indicating a continuation of a very strong positive trend and enhanced volatility. In terms of returns, Albemarle secured an 18.48% weekly return, showing daily gains at 3.48%. This recent momentum suggests strong potential for sustained growth in the coming weeks, despite modest yearly returns. Over longer periods, Eli Lilly is noteworthy, with a 304.05% annual gain over 10 years. This is supported by consistent all-time highs in recent weeks, fueled by a robust positive trend and measured upward volatility. Shifting focus to the downside, DIH Holdings U.S. increased, Class A plummeted to zero, losing 0.66 or 99.8% this week. It's a new all-time low, marking continuous declines and a strong negative trend, highlighting significant downward trends in recent sessions. On the returns end, DIH Holdings U.S. increasers Class A, showed a near total 99.8% loss over a week, indicating severe declines and daily negative trends. This consistent poor performance suggests an urgent need for reevaluation in strategies by DIH Holdings. This week, the worst-performing U.S. stocks were led by DIH Holdings U.S. Inquros Class A, which fell to zero. Caixin Auto and Coro Bio also saw significant declines, each reaching new all-time lows, illustrating a very strong negative trend across the board. Among large-cap stocks, Iron Mountain led the declines with a negative trend, losing 12.2%. Molina Healthcare recorded a new one-year low, dropping by 9.5%. Strong negative trends persist in these giants, indicating considerable downward momentum. Large-cap declines continue with notable total returns. Molina Healthcare fell 9.5% this week, enhancing its 6-week negative streak. Despite mixed trends, Dell Technologies and others also faced pressure, reflecting the broader struggles among these stocks. Reviewing the annual performance, Iron Mountain suffered a negative return of over 19%. Meanwhile, Molina Healthcare continues its downtrend with a substantial negative annual rate of return, despite long-term gains elsewhere, illustrating the varied fortunes in big caps.
And now on to U.S. sector performance. The healthcare sector leads with a strong showing this week, closing at 1,767.49, up 65.85 points or 3.8%. Notably, it achieved a new one-year high, continuing its strong positive trend amidst some upward volatility. The sector has risen for 2 consecutive weeks. Market breadth shows mixed movements. The energy sector saw 107 advances and 43 declines today, while the healthcare sector recorded more declines at 616 against 397 advances, despite its higher close milestone. Basic materials reflected weaker performance with significant declines. In terms of returns, the healthcare sector outshone others with a 3.87% total weekly return and a daily average of 0.76%, driven by its new one-year high. Meanwhile, technology achieved a year-to-date return of 24.45%, showcasing a robust long-term uptrend. Over a decade, the technology sector delivered exceptional performance with an ARR of 23.17%. Comparatively, the healthcare sector maintained a strong annual growth of 8.21%, reflecting consistent long-term performance. Energy faces weaker historical returns, but recently improved with a positive directional trend.
In the healthcare sector, Eli Lilly continues to exhibit a very strong positive trend, closing the week at an impressive 1,025.28. It marks an all-time high, rising 10.9%, with some upward volatility noted. Becton Dickinson follows with a mixed positive trend, closing at 193.4, up 8.5%. Biogen also shows a new one-year high, ending the week at 167.55, a notable 7.7% increase, with a very strong positive trend and significant upward volatility. Merck, in strong upward volatility, achieved a strong positive trend, rising 7.6% to a close of 92.92. Vertex Pharmaceuticals concludes this lineup with a mixed positive trend, closing up at 437.15, gaining 6.7%. Eli Lilly's one-week total return is an impressive 10.92%, maintaining a very strong positive trend over this period. In comparison, Becton Dickinson showcases a moderate 8.55% return over the same time frame. Biogen and Merck each present notable upward momentum with one-week returns of 7.74% and 7.7% respectively, while Vertex Pharmaceuticals follows with 6.76%. Eli Lilly delivered a total 3-year annual rate of return of 42.22%, marking significant growth over a longer-term horizon. Becton Dickinson recorded low returns over the past decade at 2.9%. Biogen, despite recent upward trends, shows a decline over 10 years with a minus 5.17% annual return. Vertex Pharmaceuticals shines with a 10-year annual return of 13.51%, showcasing long-term gains.
This week, sectors faced notable challenges. The consumer cyclical sector experienced a drop, closing at 1,879.78, down 52.95 points. It's now been down for 2 consecutive weeks, showing a mixed positive trend. Similarly, the utilities sector fell to 449.62, indicating a positive mixed trend. Market breadth shows declines outpacing advances. The consumer cyclical sector saw more one-day and one-week declines in contrast to advances. The real estate sector also experienced more extensive monthly declines, further aligning with its very strong negative trend. Evaluating returns, the sectors showed downwards movement. The consumer cyclical sector registered a weekly loss of 2.7%, with a decreasing monthly return. Notably, the real estate sector exhibited a minor monthly gain, but retained a strong negative trend. Over long-term analysis, mixed narratives appeared. The consumer cyclical sector showed a 10-year annual rate of return at 11.79%. On the positive side, the communications services sector achieved the highest 3-year return among these, emphasizing its mixed positive trend despite current declines.
This week, consumer cyclical stocks are showing significant declines. Williams-Sonoma ended at 182.24, falling by 14.71, with a mixed negative trend. Tesla closed at 404.35, down by 25.17, experiencing strong downward volatility. Smurfit Westrock recorded a new 1-year lower close of 34.29. In terms of returns, Williams-Sonoma saw a weekly total return of minus 7.4%, while Tesla decreased by 5.8% with high volatility. Smurfit Westrock, continuing its negative trend, has a monthly total return of minus 7.12%. A 3-week consecutive decline is noted for this stock. Looking at long-term returns, Aptiv and Wynn Resorts show positive 10-year growth, with ARRs of 2.26% and 6.85% respectively. Meanwhile, Smurfit Westrock highlights a concerning trend with a negative 3-year ARR of minus 2.5%.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.